Hello and welcome to our Entry Auditing webinar. I'm Jane Taeger, Director of Compliance for Samuel Shapiro and Company. I would like to thank ICPA for inviting me to present this webinar to the membership. We really appreciate the terrific turnout. A little information about Shapiro. We are a third-generation family-owned customs broker and freight forwarder founded in 1915. We pride ourselves on encouraging our employees to take the broker exam, and a quarter of our total staff, not just brokerage staff, is a licensed broker. We believe in old-fashioned customer service, yet have leading technology solutions. We are one of the few self-program brokers, so we have the flexibility to meet our customers' needs. In fact, 2 of our IT staff are licensed brokers. We work with your entire supply chain and have a global network of agents to work with you on all of your transportation needs. We have 6 offices on the East Coast, but are able to clear cargo in any port in the United States. Our web address is below, and we welcome you to stop by our website and take a look at Shapiro. In today's webinar, we will cover why it is important to audit your entries. Auditing is a major component of internal controls, so we're going to review the 5 internal controls for an import program. Record keeping is also a crucial part of internal controls and your overall compliance program. We will discuss how to put together an audit program, how to select entries for audit, what to look for when auditing an entry, and finally, what happens after you have done the audit. Follow-up and corrective action are necessary to fully complete the audit process. I mentioned we will be discussing internal controls. Auditing is key to ensuring the controls you have put into place in your compliance program are indeed working. An audit can help identify weaknesses in your import processes. Perhaps your commercial invoices are deficient. Maybe your broker is not classifying your products correctly or is not using the database you provided them. Are you declaring assists? Auditing is a great way to not only identify but also to correct these weaknesses. Auditing can also catch errors and get them fixed before they become a pervasive problem. No one wants to find an error and realize it's been going on for years, and then you have to face a prior disclosure. Be proactive and audit your entries so that little problems don't turn into big problems. You should establish desired outcomes in your audit process. What is an acceptable pass rate? Some may say 100%, but you should aim for at least 95%. You know what your entries look like. You need to be sure the entries were done correctly so that there are no surprises down the road with unexpected duty costs or worse, penalties for incorrect entry declarations. Your management should be aware of how your import program is running. Make sure your boss knows how smoothly your entries are going and that there are no potential issues with customs. And we'll talk about reporting audit results to management a little bit later. Improving performance can apply to multiple parties. Obviously, you want to be sure your broker is performing well in handling your entries. You want to be sure you are performing your job well by exercising thorough oversight of your entries and monitoring their accuracy. And finally, compliant and accurate entries can help your company perform better by avoiding delays in clearance and potential penalties. By auditing your entries, you may spot opportunities for improvement or even cost savings. You may find improvements that can be made in your internal procedures or your compliance manual, or improvements to make with your broker SOP. Or you may find cost savings in your audits, for example, with free trade agreement opportunities. A history of clean audits is a good predictor of future compliance, whereas a history of entries with errors is a predictor that you may continue to have errors unless action is taken. And then we come to my favorite. Isn't that what I pay my broker for? Too many importers are over-reliant on their broker, and honestly, I really see this borne out based on the questions posed to the ICPA membership. Some importers feel that if they have the broker do the entry, there's no need to audit it. Part of your responsibility as an importer is to supervise the work of your broker. You can outsource the entry responsibility, but not the liability. The broker needs to take direction from you, not the other way around. You should have an SOP on file with your broker with clear expectations of how your entries are to be processed. The primary reason to audit your entries is that you are the importer. These are your entries. The Customs Modernization Act was signed into law as part of the NAFTA legislation during the Clinton administration in 1993. The MOD Act established the reasonable care requirement for importers when making entry. Under the law, the importer of record is legally responsible for using reasonable care to enter, classify, and determine the value of imported merchandise, and to provide any other information necessary to enable Customs to properly assess duties, collect accurate statistics, and determine whether other applicable legal requirements, if any, have been met. Failure to exercise reasonable care can delay the release of merchandise and could result in penalties. Customs very helpfully published a reasonable care checklist to provide guidance to importers to help them understand and meet their reasonable care obligations in the import process. In the checklist, Customs asks the following questions. Has a responsible and knowledgeable individual within your organization reviewed the Customs documentation prepared by you or your expert to ensure that it is full, complete, and accurate? If that documentation was prepared outside your own organization, do you have a reliable system in place to ensure that you receive copies of the information as submitted to U.S. Customs and Border Protection? That's your record keeping. That it is reviewed for accuracy. Hello, here's the audit part, why we're all here today. And that U.S. Customs and Border Protection is timely apprised of any needed corrections. That's post-entry. If you use an expert to assist you in complying with Customs requirements, have you discussed your importations in advance with that person? And have you provided that person with full, complete, and accurate information about the import transactions? So there's your broker SOP. Customs has clearly outlined the expectation in the reasonable care checklist that you have an audit process in place. Failing to exercise reasonable care can lead to the imposition of penalties. Customs has 3 levels of penalties: negligence, gross negligence, and fraud. Negligence is just the simple lack of reasonable care. Oops, I didn't know. The penalty for negligence is 2 times the loss of duties. Well, what if your commodity is duty-free? Then the penalty is 20% of the dutiable value. The next level is gross negligence, which is an act or material statement done with knowledge or with disregard for or indifference to obligations. Yeah, we knew it was wrong, but we did it anyway. Now we're up to 4 times the loss of duties, or 40% of the dutiable value. And finally, we have fraud, an act or material false statement done voluntarily and intentionally. Usually with fraud there is criminal intent. The penalties are quite steep at 8 times the loss of duties, or 80% of the dutiable value. Considering the exposure and liability with Customs, it makes sense to have an established audit program. So as we mentioned, you need to make sure you are monitoring what your broker is doing. You need to make sure your entries are accurate, which will help you avoid delays in release and possibly the aforementioned penalties. Auditing will identify any errors being made or potential shortcomings in the process. Once you identify the error, then you need to figure out the source of the error. Did the broker make a mistake, or is there an issue with your internal process? Do you have an SOP on file with the broker? Do you provide written instructions for your entries? Is the broker following those instructions in the SOP? Is your documentation complete and accurate? We'll go over the elements for commercial invoices shortly. When you're auditing, you want to be sure your procedures were followed. If you find an error, you need to determine what procedure was not followed. For example, was the commercial invoice not reviewed when received from the supplier? Or perhaps the procedure itself is the issue. Do you have a procedure where the commercial invoice is to be reviewed when received from the supplier? Auditing will help your overall compliance program, including broker oversight. A good compliance program can be summed up in 4 words: reasonable care, internal controls. Customs has designed the focused assessment program around the measurement of internal controls relating to import compliance. Having a structure in place is what's important. Internal controls are a way of measuring the effectiveness of a company as a whole. So internal controls strive for the effectiveness and efficiency of operations, the reliability of reported data, and financial reporting is for an accounting application, and compliance with applicable laws and regulations. Better internal controls means less risk for you and for Customs. Because auditing is so closely tied to internal controls, we're going to spend a little time going over them. These are the 5 interrelated components of internal controls as defined by the American Institute of Certified Public Accountants: control environment, risk assessment, internal control activities, information and communication, and monitoring. Internal controls are most effective when they are built into a company's infrastructure and are part of the essence of the company. Each of these internal controls needs to be a continuous process. This is how you can ensure compliance with customs requirements. In a focused assessment, customs will look at your organizational structure, your policies and procedures, assignment of responsibilities, and employee training. All of these are related to these 5 internal controls. The monitoring control encompasses auditing, which is why we're all listening today. The first internal control component is the control environment, which sets the tone of an organization and acts as the foundation for other internal control elements. Internal controls will function well if management believes those controls are important and communicates that view to employees at all levels. The control environment will describe the organizational culture. An effective control environment provides structure and discipline. Control environment factors include the integrity, ethical values and competence of the entity's people, management's philosophy and operating style, the way management assigns authority and responsibility, and organizes and develops its people with a commitment to hire, train, and retain qualified staff, and the attention and direction provided by the board of directors. Management and employees should have a positive and supportive attitude toward customs internal controls and operations. If management views controls as unrelated to achieving its objectives, or worse, as just a lot of red tape, then that attitude can spread like a cancer, and employees will then view internal controls as an obstacle. Management commitment is part of the control environment. Has management set the right tone by clearly stating in writing its expectation or policy for compliance with customs requirements? Does the import department have sufficient authority within the organization to assure customs compliance? You want to make sure responsibilities are delegated appropriately. Is management knowledgeable about customs and potential customs issues? Has management considered what the cost of a customs investigation would be? I know we have all different kinds of different size companies listening to this presentation. Your customs group can be just you, or there might be a dedicated compliance department. The main point is to have an organizational structure in place with assigned authority for customs activities. Compliance can fall under different umbrellas. Obviously, you're going to do what makes sense for your company, but your compliance outlook may depend on what department you report to. For example, if you report to the legal department, then your outlook is, let's comply with the law and avoid penalties. If you report to tax or finance, then let's see if there are ways to reduce duties and fees. And if you report to logistics, let's make sure our goods enter the U.S. quickly and efficiently. Every entity faces a variety of risks from external and internal sources that must be assessed. Once you have identified a potential risk, an action plan can be developed which will assign resources to analyze and address that risk and manage future risks. A risk is anything that endangers the achievement of an objective. You need to ask, what can go wrong? Because economic, industry, regulatory, and operating conditions will continue to change, mechanisms are needed to identify and deal with the special risks associated with change. Change can be personnel turnover, rapid growth or downsizing, establishing new product lines. Compliance becomes more difficult as your program expands. Mergers and acquisitions have their own set of risks and challenges. So what are your risks specific to customs transactions? Do you have a prior history of customs problems? Do you import using free trade agreements? Do you have anti-dumping or countervailing duties? Do you have complex valuation or classification issues? Maybe you use a lot of basket provisions or part provisions. Are you importing under customs programs that are new to your company? Maybe you're importing from a new country or a new supplier. Having internal control activities in place will minimize your risk and enhance the effectiveness of your organization. Internal control activities ensure the necessary actions are taken to address risk. Internal control activities are essentially your policies and procedures that help ensure management directives are carried out. A performance review is a control activity. So is an import manual. You want to have proper control activities for each of your company's customs activities. Control activities occur throughout the organization at all levels and in all functions. They include a range of activities as diverse as approvals, authorizations, reviews of operating performance, and segregation of duties. Your internal controls can be preventative, for example, requiring a supervisor's approval, or detective, like reconciling reports. You need to strike a balance. Excessive controls can be as harmful as excessive risk and result in increased bureaucracy and reduced productivity. Developing, implementing, and modifying formal policies and procedures will help ensure management's goals and objectives are met. Policies are the rules to abide by and should lay out the expectation. Procedures tell you how to abide by the rules. Your day-to-day procedures should be used to achieve customs compliance. Now, while customs doesn't require you to have a written manual, it will significantly improve the likelihood of an early termination of a focused assessment. A customs manual should be your playbook of your company's import operations. It should explain why, by whom, when, where, what, and how your internal import control policies and procedures are to be implemented. These will be your guidelines for procedures and safeguards to ensure employees know their import responsibilities, that the right procedures are being followed, and that the right questions are being asked to safeguard against potential import violations. Once you have policies and procedures in writing, you need to use them. Without a written compliance program, there's no baseline from which to measure its effectiveness. The manual should explain what should happen and what shouldn't happen. Make sure the manual addresses your risk analysis. It's your foundation for doing the right thing and should be your roadmap to consistent import compliance. The bigger the company, the greater the need for written policies and procedures. But even small companies need written procedures. They ensure agreement and accountability, especially if there's employee turnover. You want to be sure they are available to all relevant personnel, so you can post them on your company intranet. In addition to a compliance manual, you want to ensure your automated systems also effectively support your customs program. 3 key factors for a compliance manual are having the appropriate content, a wide distribution, and a mechanism for keeping the information up to date. Even if you don't have a manual per se, do you have any written procedures to ensure compliance with customs? You must be able to document your processes. Having a manual demonstrates to customs that you are aware of the rules and regulations, that you are showing thoughtful consideration of the total import transaction, and that you have a systematic, institutional approach to compliance. For example, if customs asks how you arrived at a classification, the answer is not, well, that's how we've always done it. You must have consistent application of procedures. The rule of thumb with customs is not what you can tell them, but what you can prove. Your manual should help you be able to accurately report customs information and maintain accountability for customs compliance. Use the Reasonable Care Checklist as a guideline for developing the manual. Your compliance manual will be your roadmap, consisting of written and tested, tried and true operational procedures. It shouldn't have too much legalese. It should be useful to both the Customs Department and the non-Customs departments. Use the manual as a training tool and to help with your audits, since it will be the benchmark for your processes. Say what you do and do what you say. A key internal control activity is record keeping, which is a crucial part of auditing. Auditing can even help improve your record-keeping procedures. When you're auditing the entry, you have to be sure you have all the necessary records to audit against. The 7501, commercial invoice, packing list, transport document, purchase order, payment record, and receiving record. Record-keeping is your friend. If you undergo a customs audit or have an inquiry from customs, accurate and complete record-keeping will be your savior. Your record should tell the story from purchase order through to the customs entry, through to vendor payment and receipt of goods. Where do you keep your customs records? Are your customs records in order? And I know that seems obvious, but I visited one importer once and he just threw the documents in a cabinet because he didn't have time to file them. Another importer had years of liquidation notices in plastic grocery bags on the floor. At least Customs stopped mailing those little carbon forms a few years ago, so you're going to have to get your liquidation information from ACE or your broker. Can you find documents just by the entry number? How do you track your shipments? Can you match a PO number to an entry number? The keys to effective record keeping are identify, maintain, produce, and produce in a timely manner when Customs sends a request. Records means any information made or normally kept in the ordinary course of business which pertains to these activities. Any importation, declaration, or entry, the filing of a drawback claim, a NAFTA certificate of origin that was prepared for export, goods moving in bond, the collection and payment of duties, taxes, and fees to Customs, and any other activity required to be undertaken pursuant to laws or regulations administered by Customs. For example, can you put your hands on all powers of attorney that you've issued to brokers? What about your Customs bond? You'd be surprised how many importers have no idea who wrote their bond. The A1A list is found in the Customs regulations and in the Informed Compliance publication on record keeping, and it provides a list of the records importers are expected to maintain. It's called the A1A list from the section of the law dealing with record keeping. In addition to the A1A records, you need to maintain and timely produce documents and information such as business and financial records ordinarily maintained for normal business transactions. These records also will substantiate the accuracy of the information provided to Customs. For example, financial records will support valuation. Inventory records can be used to verify the quantity of merchandise received. Product information like catalogs and drawings will support the classification. Customs will look to see if your records are accurate, are they easy to retrieve, and do they make sense? So how long do you have to keep your records? Well, generally 5 years from the date of entry, or 5 years from the date of the activity which required the creation of the record. For example, goods can remain in a bonded warehouse for up to 5 years. So that puts you at 10 years for record keeping if you make the final withdrawal on the last day. For reconciliation entries, the record keeping period is 5 years from the date of the recon entry. So since entries can be reconciled up to 21 months later, now you're looking at 5 years plus 21 months, or almost 7 years. An exception to the 5-year rule is drawback, where records must be kept for 3 years after the date of payment of the claim. We spoke about penalties earlier, but there are also penalties for failure to comply with record-keeping requirements. For negligent record-keeping violations, oh dear, I knew that box was here somewhere, the penalty is up to $10,000, or 40% of the value of the goods for each release, whichever is less. For willful failure to keep records, and I think of this as Customs is at the door and you are at the shredder, the penalty can be up to $100,000, or 75% of the value of the goods for each release, whichever is less. If records are lost due to an act of God or other natural casualty or disaster out of your control, then there's no penalty to be assessed. Information and communication support other control components by communicating control responsibilities to management and others, and by providing information in a form and time frame that allow people to carry out their duties. Information can be as basic as a report with operational, financial, and compliance information that make it possible to run and control your business. Information can be external about events that affect your business. How do departments share customs-related information? Does the compliance department liaise with engineering, purchasing, receiving, and accounting? And do those departments liaise with compliance? The important part is that information needs to flow throughout the organization. Individuals must understand their roles in the internal control system and how their activities relate to those of others. Communication is not only internal, but also external with your suppliers, customers, and vendors. Are you keeping your suppliers and your customs broker up to date? It's very important that your broker is aware of any changes in your organization. How are instructions communicated to suppliers as to what information is required on the invoice? How are you obtaining current information on customs requirements and communicating that information to those who need to know? Everyone in the company should be aware of how customs compliance affects them and what the liabilities are for non-compliance, such as penalties and exam delays, not to mention the financial cost of exams. When you receive notices from Customs, such as a request for information or a notice of action, do you have a person in place that can coordinate a response to Customs? Make sure the owner of your compliance program is knowledgeable enough to review all Customs documents and entries. It's up to company management to foster communications between various departments. Every employee who handles imported goods or documentation associated with imported goods is a part of customs compliance. A compliance program involves every part of an organization, from the CEO to the people receiving goods on the loading dock. A lack of communication between compliance and other departments will only lead to non-compliance. It's no good having a compliance department if they don't interact with other parts of the company. In a focused assessment, Customs is going to zero in on the communication between the import department and the accounting department. Do you keep copies of emails to your broker? This is also communication and part of your record-keeping responsibilities and can help demonstrate your exercise of reasonable care. You want to ensure that employees receive appropriate training and guidance to effectively perform their job. This should be the goal of every well-run company. The lack of training or improper training are the key causes leading to penalties. Customs likes to see a training program in place. It shows a willingness to learn and stay up to date. During an audit, Customs will ask about the background and experience of the person in charge of your compliance program. All employees should be familiar with compliance, so try to incorporate compliance in training for new hires. Who's responsible to coordinate training? How often is the training conducted? And is the training documented? Last but not least is monitoring, and the crux of this presentation. The only way to know if your compliance program and internal controls are working is to assess and evaluate. Once you implement internal controls, they need to be monitored to ensure they are adequate and continue to function properly. Auditing your entries shows a commitment to ongoing improvement. Monitoring assesses the quality of performance related to customs activities. The measures should be specific so the department can be held accountable for results. If the problems or deficiencies are identified during the monitoring process, is there documentation to show corrective action? Are there subsequent follow-ups to verify the adequacy of corrective action? And are these follow-ups documented? And of course, we're going to talk more about this shortly. Monitoring will also help your company evaluate employee performance and identify training needs. So we've covered the 5 internal controls, and now we're going to get into the nuts and bolts of the audit program. When creating an audit program, you need to determine how often you are going to perform the audit, how many files are to be audited, how you will select those files, what your process will be when errors are found, what your follow-up actions will be, and how you will document the audit. And then once you define all this, the process itself needs to be documented so that you have a roadmap to follow. Now, regarding frequency, monthly is ideal, but quarterly is fine. You don't want to stretch it out more than that, or you may not have time to make corrections, because you want to be sure you have the ability to file post-entry if warranted. Also, if you plan audits on a semi-annual or annual basis, they may tend to be put on the back burner, so it's important to stick to your schedule. You should record the audit data electronically so that you can extract reports and compile statistics. A spreadsheet is fine, or depending on your system's capabilities, you can create an audit database. You don't want to use a manual hard copy checklist that you just tuck inside the file. First of all, it won't allow you to spot trends or track audits from month to month or quarter to quarter. Also, if Customs were to audit your files, do you really want your own audit sheet in there, leading Customs right down the garden path to any errors you may have found? When you do your audits, you want to make sure your entries meet regulatory requirements. You also want to be sure that your own internal policies are being followed. We will be discussing the key elements to be audited in just a moment. Who should do the audit? If you are auditing internally, has the person been properly trained? Do they know what to look for, and would they know an error if they found one? You may want to use an external auditor. If you don't have the resources to conduct your own audit, an external auditor can handle that function. Or maybe you use an external auditor, say for one audit a year, to keep you honest and to double check that your audit process is functioning as it should. An external auditor will give you an unbiased view. External auditors can be the consulting division of the broker you use, or even with a broker you don't use. If you engage a law firm to audit your entries, you will have attorney-client privilege. You may want a law firm to review your entries if you've been selected for a focused assessment, or if you find serious issues in your own auditing. So the most pressing question is usually, how many entries or how many lines should I audit? Well, there's no specific formula to follow, but the more varied your program, the more samples you should pull. Also, the larger the sample size, the greater the assurance you'll have with your audit findings. The size of the audit will also depend on your resources. You may be a department of one and also responsible for purchasing and logistics. Or you may have a large department with a dedicated auditor. Another question is, should I audit a percentage of my entries or go with a hard number? Certainly a 100% audit is not a good use of your time. In a focused assessment, Customs will go with 10% if there are fewer than 250 entries per audit period. If there are 250 or more entries in the audit period, then Customs will select 25 to 50. You should also note that in a focused assessment, Customs audits by line item, not by entry. So if you have large entries with hundreds of lines, auditing the entire entry is also not a good use of your time. If you find a significant error, you will want to pull more files of the same type. Is the error a systemic issue or a one-off event? Was the error caused by a typo? Do you find a lot of typos? Because they can be just as harmful. You can select your files from your own internal reports, from broker reports, ACE, or iTrack. The ACE reports are free, iTrack reports are not. iTrack stands for Importer Trade Activity, and it's a very comprehensive report that you order from U.S. Customs, and the cost is between $250 and $300 per report. If you download reports from ACE or if you get an iTrack report, a lot of the entry data is already preloaded, so you can just add extra columns to use for your audit. A side benefit of obtaining the data from ACE or iTrack is that these reports will show you if you have unauthorized filers making entry in your name. It's beneficial to use a combination of targeted auditing and random selection. In targeted auditing, you want to select files from your primary suppliers, but don't overlook shipments from that once-a-year supplier either. Sometimes it's the less frequent shipments that have entry issues. Select files from across your product line, from different brokers if you use multiple brokers. Include free trade agreements, anti-dumping, different countries of origin. You can also use selective sampling. Maybe one month you focus on classification, and then the next month you look at valuation. Or you can look at free trade agreements, or you can focus on new suppliers or new products. You can look at the high value or large quantity items. Maybe you look at duty-free items or your 9801 and 9802 items. Maybe one month you focus on a specific Incoterm like CIF. Once you decide your specific target, then select the files randomly from that sample. If you're choosing files from a spreadsheet, then you can use the random sort feature to choose the files. You may also have the situation where you need to perform a reactive audit. It may be triggered by a CF-29 notice of action, or the broker contacts you with a particular issue. These reactive audits will fall outside the norm of your regular audit procedure and may be necessary to stop the bleeding in your compliance program. A reactive audit may also be an outgrowth of your routine audits, as we just discussed, where you find a material error and need to investigate more entries to see how deep the issue runs. So now we're going to dive into the different audit elements. And the first review should be of the documentation itself. Does the paperwork meet your requirements? For example, does it show your purchase order number? Does it show the payment terms or the delivery location? Does the documentation meet customs requirements? Customs requires certain elements on the commercial invoice to ensure the correct classification and valuation, to ensure that all information is there for proper duty collection, to ensure all the information is there in order to facilitate release of the goods, and also information needed for the collection of trade statistics. The commercial invoice needs to show the seller's name and address and the buyer's name and address. The invoice needs to be in English or have a translation attached. It must have a clear description of the goods. If you find that your broker is constantly contacting you for information on the product so they can classify it, then how can you expect customs to know what it is if your broker doesn't know? You need the quantities with weights and measures. The invoice or packing list must show the total piece count and weight so that it can be compared with the bill of lading or airway bill to ensure the right invoice is matched to the right bill of lading or airway bill. The invoice must show the value of the goods and the currency of the purchase. You'd be surprised how many invoices we see without a currency indicated, or sometimes we'll see an invoice with two currencies, like US dollars and euros. The currency in which the invoice is paid is the currency to use for the entry. Probably the most common issue we find are invoices without the country of origin stated, and this is typically found with invoices from China. The customs regulations state the invoice must indicate the country of origin. You can never assume that the country of export is the country of origin. And while the Incoterms are not required to be on the invoice, it's certainly very helpful when they are. There may be other documents needed beyond the commercial invoice and packing list, such as a NAFTA certificate, a certificate of analysis for chemicals, a mill certificate for steel, a footwear invoice, a TSCA statement, Lacey Act details, label approvals for alcoholic beverages, and so on. Frequent invoicing errors will be, say, a shipper assumes a charge is non-dutiable and they omit it from the invoice, or a shipper fails to declare the value for U.S. origin parts that are used in the production process, or replacement goods for warranty or for items damaged on a prior shipment are not invoiced. Very common is goods that are shipped free of charge don't have a proper value associated with them. And then often in the holiday season, gifts will be included in the shipment and not shown on the invoice. A vendor manual is a great way to instruct your suppliers about the information that needs to be on the commercial invoice, or specific instructions in the purchase order or sales contract. It's more than just the invoice these days. We have things like wood packing material, ISF, Lacey Act, and the Consumer Product Safety Improvement Act. Now with classification, is it correct? Does it match your internally assigned tariffs? Are your classifications documented? And at what point is the classification done? Is it done when the new item is created, when the item is ordered, or at the time of entry? And who's responsible to perform the classification? You or your broker? Don't forget that even if your broker assigns a classification, as the importer, you are still responsible for its accuracy. If you give your broker a tariff database, you shouldn't have any classification errors, but that doesn't mean you don't have to check that they pulled the right part number. Does your broker know if you have any binding rulings? Do you? Do a cross-search of your company, including former company names or companies that you've purchased, to see if there are any rulings out there. Do you have information and documentation about the product to support classification? Catalogs, engineering drawings, product specs, correspondence with the supplier, correspondence with the broker, all of this will help you prove how you arrived at your classification. If the broker made a free trade agreement claim, did you authorize this? Your broker should not be claiming free trade agreements without your written permission. For example, did the broker have the NAFTA certificate when they made entry? Do you have the documentation on hand to support a free trade agreement claim? Can you get proof of origin if requested by customs? Bills of material, production records, financial records, say if there's a regional value content component or a minimum country of origin added value like for GSP. You're not required to claim free trade agreements. You don't have to do NAFTA. We work with an extremely large importer who's made the decision not to claim any free trade agreements, not even GSP. They know their limitations and that gathering and maintaining the documentation to support a free trade agreement or a GSP claim would just be too challenging. There is a cost associated with saving duties. So make sure that if you do claim a free trade agreement or GSP, that you can get the information required from your supplier. Many of the newer free trade agreements do not require a certificate of origin at the time of entry like NAFTA does. Rather, the importer must be able to provide substantiating documentation upon request by customs. When auditing the value, you need to be sure all costs were reported, including assists, testing costs, and tooling. Do you know if your supplier may be sending additional invoices directly to the accounting department for things like tooling or royalty payments? We've actually seen this with a few importers, and the import department had no idea that these invoices existed. And if these invoices relate directly to imported merchandise, the costs are most likely dutiable. Make sure the correct currency was used in the entry. If you're importing in a foreign currency, ask your broker what they use to determine the rate of exchange. Does your broker know which suppliers are related parties, particularly if the supplier does not have the same name as your company? All related parties should be clearly identified in the broker SOP, so there's no question about how to declare them. Watch for samples and other free-of-charge merchandise. Are you giving your broker a true value, or are they just declaring $1 for everything? If you are deducting freight and insurance on shipments with C or D Incoterms, do you have proof of the actual charges, I'm going to tell you this is absolutely low-hanging fruit for customs. You must be able to substantiate these non-dutiable charges with proof of the actual cost, such as an invoice from the carrier or insurance provider. Charges shown by the supplier on the commercial invoice are not acceptable for deductions unless you have verification of the actual costs. Does the value on the entry summary match the commercial invoice? Auditing the entry for value is your first step. You also want to be sure that you can check your company's payables records to see if the entry summary value matches the purchase order amount and what's being paid to the foreign supplier. Make sure your accounting department is on board and provides you the necessary access to the payables information. This is all part of your internal control environment. Perhaps your system already has checks and balances in place to ensure the purchase order price matches the invoice payment to the supplier. Maybe add another field to include the value on the entry summary. I'm going to reiterate having the invoice show the country of origin. We really see way too many invoices without the origin stated. At Shapiro, we do not allow our users to use the country of origin shown on the ISF datasheet, as this is often prepared by a freight forwarder who will not have knowledge of the actual origin. Was the origin reported correctly? Was the correct country of export reported? Did you claim U.S. goods, and can you substantiate U.S. origin? Does your purchase order instruct the foreign supplier on country of origin marking? Again, a vendor manual is a great way to document consistent instructions. You should also set up a system of spot checks for country of origin marking with your receiving facility. You want to check the 7501 to make sure the correct reportable quantity was entered, particularly if your duty is based on the net quantity. As mentioned before, check the piece count on the invoices and packing lists to make sure they add up to the piece count on the bill of lading or airway bill. Was an invoice left off the entry, or was the wrong invoice used with that bill of lading or airway bill? Make sure you can establish a link between the purchase order quantity, the quantity reported on the entry, and the quantity shown in receiving records, whether the goods have been delivered to your own facility, a third-party warehouse, or directly to your customer. Hopefully your system is automatically checking the quantity received with the quantity on the purchase order. The key is then telling the compliance department when there's a discrepancy so that action can be taken with customs to make adjustments on the entry. You must have a clear communications loop when there are overages or shortages. If your product requires a declaration to a participating government agency, did you instruct your broker to do so? Do you have supporting documentation if it's required, like a TOXICA certificate, the genus, species, and country of harvest details to support LACI? If your goods are subject to FDA, do you have a database of the FDA product codes and affirmation of compliance codes to be used? Do you have access to the Consumer Product Safety Certificate of Conformity? Do you know if your goods are subject to anti-dumping or countervailing duties, and does your broker know? This information should be captured in your product database. Do you know who the actual manufacturer is so that you're declaring the correct case number and the rate? Do you have a current certificate of non-reimbursement on file? At what point is this document being submitted to customs? The process is actually much easier in ACE since the form is now declared electronically at the time of entry. Just make sure you have a copy in the event it is requested by customs. We've already spent some time on record keeping. Making sure your records are complete should be part of your audit as well. Use a checklist to be sure you have everything. And again, the key documents are the purchase order, invoice, packing list, bill of lading, airway bill, or other transportation document, the 7501 entry summary, your broker's invoice, the receiving record, and the payment record to the supplier. Now, all of these records do not have to be in the same file. You just have to be able to retrieve them when needed. It's very important that the accounting records can be matched to the entry records. Other things to check include if the entry was timely filed. Can you view the ABI information on the broker's portal, or maybe your broker provides you with entry metrics? You need to get your monthly ISF report, and you can get this from ACE or from your ISF filer. And is the entry number recorded in your system, and can it be linked to your purchase order or the vendor payable? Remember, correspondence from customs, such as a request for information, notice of action, a bill, or a refund, will reference only the entry number, so you've got to be able to match it up to your internal records. Okay, you've done the audit, now what? You need to track the audit results. Did the entry pass or fail? What is the percentage error rate for each audited element and for the audit as a whole? Part of your internal controls needs to include reporting the audit results to your management. When reporting to management, you don't necessarily have to go into a great amount of detail. Provide a summary with a snapshot of the audit process and the methodologies. You want to show the results for the audit overall and for each of the areas audited. Definitely include the financial outcome. Do you owe additional duties, or can you recover overpaid duties? And then wrap it up with the actions you plan to take and how you plan to prevent recurrence. And of course, you definitely want to make sure that you highlight the good parts. When errors are found, you need to make corrections with customs. For example, if there's a receiving discrepancy, are these overages and shortages being declared to customs? And if there are overages, shortages, or damages, was an adjustment made in the payment to the supplier? Even if there's no duty impact, non-revenue errors are still reportable. That's what the quarterly P is for. And if you're using ACE, then those errors are fixed using the post-summary correction. You want to keep copies of your post-entry actions with your entry files. You may also want to keep a separate post-entry record or a log as well to monitor broker and entry performance. If a string of serious errors are found and you discover this issue is systemic, it may be time to call a customs attorney and discuss filing a prior disclosure. Don't just take corrective action. Document it. Show what the error was and what actions were taken to correct the error, and what actions were taken to prevent the error from occurring again. Also document who was responsible for each step and what the timeline is for each action. In the next audit, make sure the corrective actions were indeed implemented and successful. Again, if you find an area of significant non-compliance, you need to do a follow-up audit. Select more samples, and that will help you determine if you have an isolated incident or a pervasive problem. Use your audit results to update your internal controls if need be. Do your procedures need to be updated? Did the procedure itself cause the error? Or maybe you had a procedure in place and it was not followed. For example, your engineering department made a change to a part and then didn't report the change to the compliance department so that the classification could be updated. Does your broker SOP need to be revised? Maybe your broker didn't know that ABC Company was a related party because it wasn't in the SOP. The audit follow-up can also include training or refresher training. So I'd like to end with an overview of how your company can demonstrate reasonable care. As part of your internal controls, you need to have a reliable and documented compliance program. Make sure you have a knowledgeable, responsible, and empowered manager in control of the import program. Make sure employees are trained, and it can be internal training, seminars, webinars like this one, and other educational opportunities. Have good written interdepartmental communication relative to customs compliance issues, and how are these departments sharing customs-related information. Keep your records for 5 years. You need to know your product, know how it needs to be entered, including other government agency requirements. And as we've spent this time together, audit your entries to ensure your internal controls are working. If you need help with any part of your compliance program, seek the advice of an expert. This can be a licensed broker, a customs attorney, consultant, or accountant. If you seek the advice of an expert, please get it in writing. Having written advice is worth its weight in gold when it comes to insulation from penalties. The cost of putting in a compliance program will be far below the cost of penalty actions. A reliable system of internal controls, including auditing, ensures compliant transactions. Compliance is not a barrier, but rather it's a strong framework around which to design the most efficient operations for an end result of lower cost and less risk. So I thank you very much for joining us. My contact information is right here if you have any questions or have any issues you'd like to get in touch about. So thank you very much again.